Hello and welcome to the week ahead video with me, David Madden. Now before we talk about the major events of next week, let's just take a quick moment to recap the major events of the week just gone. Now it's worth noting that I'm recording this video on Thursday the 9th of June. Now, today we heard from the European Central Bank, who issued quite a hawkish update, and the ECB made it quite clear that they're looking to hike interest rates by 25 basis points next month. What's also been going on is we've seen a broad rise in government bond yields. The US 10-year yield is above 3%. There are concerns about the health of the global economy. There are concerns about high levels of inflation, and there are fears that there's going to be further interest rate hikes on the agenda. Now, why is this going to impact the likes of the Dow Jones? Well, next Wednesday we have the Federal Reserve meeting, and it's widely expected that the US Central Bank on Wednesday will hike interest rates from 1% to 1.5%. Now, looking at the price action of the US30 in the short term, we can see it has been creeping lower. We can see a series of lower highs along this pattern here. Looking at the MACD indicator, we can see that momentum is in negative territory, indicating that the bears are in control, and the RSI is pointing lower as well, suggesting a price bias is to the downside. If you do continue to hold below these two simple moving averages, it's likely the short-term bearish trend will continue. Moving lower from here, we could look to retest 32,510, and a break below that could see us back down towards 32,040. Now, the more short and even medium-term bearish trend needs to be put in context as a much longer upward trend that we've seen here. The US30 enjoyed a very large rally between mid-May and late May. If the US30 can manage to hold above this area here at 32,510, that could be an early indication sign that the longer term upward trend is still in effect. If we do rally from here, we could look to encounter resistance from 33,474, and a break beyond that could see a target this region here at 34,118. Also next week, not only do we have an update from the US Central Bank, the Federal Reserve on Wednesday, we also have the interest rate decision from the Bank of England on Thursday. Now the BOE update on Thursday could inject volatility into GBP USD. And if you take a look at the price action of the currency pair recently, it has broadly been drifting a little lower. To be fair, it's been sort of range bound, as you can see by the price action here, but when looking at the more medium term trend, it has been a little skewed to the downside. Looking at the MACD indicator, we can see that momentum is just about in negative territory, indicating that the bears are marginally in control. While the currency pair continues to hold below these three simple moving averages, it's likely the short-term bearish trend will continue. Moving lower from here, it could look to retest one spot 24.29, and a break below that could see it retest one spot 23.29. Now, the more short-term and even medium-term bearish trend needs to be put in context of the sharp rally the currency pair enjoyed between mid-May and into late May. If we can see if pound dollar does manage to hold above this area here at one spot 24.29, that could be an early indication that the longer term upward trend is still in effect. If we do see a rally in GBP USD from here, resistance might be encountered at one spot 25.98, and a break above that could see it retest the recent peak of one spot 26.66. So just to recap, on Wednesday we have the Federal Reserve interest rate decision, and on Thursday we have the Bank of England interest rate decision. That's all from me from this video. Thank you very much.